Hi traders and welcome to the technical analysis market wrap on Friday the 6th of May. So we've seen some good volatility return to the market, especially in the last 24 to 48 hours. So we'll jump straight into the charts and have a look at some of the majors. We are at a non-farm payroll Friday again, so we'll certainly have a look at what's possible for today and early into next week. All right, we'll start out here with the Aussie USD, and you can see we had a really big retrace up to the 20 moving average, and you can see the pullback actually happened very, very quickly. It's actually happened in this session, in the most previous session, touched the 20 moving average and pulled right back down. When we start to see big reversals like this, the market is starting to get extraordinarily shaky. So, realistically, when you go back in time, you can basically really compare what has happened in the past to what could potentially happen now. And you can see that we haven't really seen a big reversal candle like this happen in the most recent history. You can see even though we have had reversals, there haven't been reversals to this magnitude. So that tells us that obviously we've had a very big week. We know we've had the interest rate rise by 0.5% in the US. We've seen some smaller rises throughout the world, here in Australia as well. Now, that has had an impact, but we already knew this was going to happen. It wasn't like it's a surprise that we had any interest rate raises. It was just more that when it does happen, it still shakes the market. Now, we know, again, traditionally non-farm payroll Fridays are a pretty quiet day. Actually, normally the week is relatively quiet and steady, but the last 48 hours worth of action has been very, very volatile, and the VIX has gone up to nearly 32 again. So we know that we're getting the volatility return. Look, when we see this sort of thing happen, 70 is still our target for the Aussie USD. You can see, down here, this is the level that we're really aiming for. And although it stopped short of it last time, only a few days ago, it did bounce off very, very quickly, and it has hit the 20 moving average and effectively sold off. Now, it's flattering it a little bit with this little mini move up that we've just seen in the last probably in the last hour, really, because prior to that, it was looking very, very bearish. It's one of those ones where we're going to have to kind of watch and see. We're probably going to hear a lot of that today in today's video, where, we really need to get today out of the way, because I think once the biggest week of the month, and this is probably the biggest week of the quarter, is out of the way, we're probably going to be really starting to get entrenched in some of those bigger trends. That's what I'm pretty comfortable with. So if you are going to trade the Aussie USD, just be very, very mindful that it is approaching those levels where it's back to 75 or 71 sort of 15 at the moment. It got down to as low as 70.94. If it gets a new low, depending on what happens in the Asian session today, if we see a new low happen prior to the close of Asia, I would be starting to look towards that 70 cent mark throughout the European and New York sessions, because I think that would be a very bearish move for it, or a continuation, really. That's what we're basically seeing. We're going to go to the smaller time frames to really appreciate that, but if we do see a 4-hour close even probably below this level here, that would be enough for me to start looking at scalping down to the 70 cent mark, which is the target for any of the short scalps. Failing that, the long doesn't look very good, really. Like I know like this was pushed up very, very quickly by the interest rate rise on Tuesday in Australia, so we know we had a pretty big move on that. But realistically, when we're looking at this now, it's starting to look a little bit precarious. For me to go long on this one, it's going to, at the very, very least, the 4 hours is going to have to close above those moving averages and above that 71.60 area again, that green line, because that is the roll reversal zone. So a little bit of work to do for it, but if it does do that, your target's very clear as well. The 72.50 is the first initial target for the scalp. Failing that, a break lower here, and 70.20 to 70 is the level that we'd be aiming for. All right, we'll move over to the USDCAD here. Similar in the sense that it actually hit the resistance that we were talking about last week. No worries there. It got all the way to the 129, which is always going to be our target when we know that we've got all this behind us. So, realistically, look, it's reversed at the right place, came down, touched the 20 moving average, and then bounced off. Although it looks messy on a chart, this is actually trading technically perfect. All of the levels that we talk about are being hit. And realistically, it's a relatively easy one to scalp as well. Like, you could go down to a smaller, like a 1 hour. You can see you had the opportunities all the way through on the 1 hour, on the way up to that 129, and on the way down, once it did start to sell off and saw the weakness, you can see that it was respecting the 20 moving average, which is the one we're always looking for, and off it went. And then, of course, when we get the level of support at that 127.20 area, which we knew was support. We've been talking about it for weeks. When it did that, you get a mini inverse head and shoulders on a 1 hour pattern, and bang, off she goes. And realistically, we're back at 128.60 in a heartbeat. So this one's one of those ones where we're about to get a 20-50 moving average cross at around this level here. If that does happen and it starts to push up higher again, I would probably like it to pull back just a little bit more. If I was going to scalp this one, I wouldn't mind it pulling back maybe to those moving averages and finding a little bit of, just a bit of support. I'd like a little bit more support than what we've got here. If it does that, I'm going to find it a little bit easier to trade and try and get it back up to that 129. It is a scalp. Realistically, you probably should be well and truly out of this one by now for the week. It's provided really good trading opportunities for the week, so hopefully you're able to take advantage of that. But now it needs to get back to these moving averages and then look for a new break of this level here, and that will get us up to the 129. It's absolutely scalping now, so it's already, the move's already happened. We're scalping it. On the flip side, if it starts to shorten off again and we start to see a break below these moving averages on a 1 hour even, you can probably start aiming for the bottom of that channel again, around that 127.20 area. That wouldn't be a bad trade as well, but they are all scalps, okay? So just be mindful that they're only scalping on the US dollar CAD at the moment until we see some real break of a serious level, which, 130 on the top end and 127 on the bottom end, but a really good range in between. All right, we'll move over to the US dollar yen now. This is an interesting one. Look, it did basically, touch that 131 and then has sold off ever since. We saw the reversal today, but again, this is only just really going in sync with what the rest of the market has done. That pattern there is identical to that pattern there. It's uncanny actually how close that is to being the exact same weekly formation. You can see that we've basically done the exact same thing. It's an interesting one in that this week's been a little bit more volatile on the bigger markets, and this one is pretty much held strong. So that tells me that it's probably starting to find its levels around that 130. Like realistically, if the moves that happened last night, this could have easily broken to a new high, but it didn't. So that probably tells us that it might be finding its peak around that 130, 131. Probably looking for shorting opportunities more than long. Again, you got to go to the smaller time frames to really be able to trade this, because on the daily it doesn't give us a hell of a lot of clues. But you can see that, look, the 4 hours just been fantastic. If you were trading it up on the long, you can see all the trading opportunities. Okay, all on the 20 moving average, but you see that bit of a weakness now. So even though we've had a pretty strong session, you can see that it's not overly bullish, and it is finding resistance right at this point here. So I'd be looking for two things really. If we get a daily close above this level, and that's where it's at next week, that's what I'll be going for. And then next week we'll be looking for a trend to keep continuing into the 130s. But of course, a 4 hour lightning bolt on the way down and breaking past all this level here and getting past these moving averages, we'd start to target the 128s and the 127 zones. This is the first probably real test. The 127.20 is probably the first area I'd be really aiming for on a scalp down. But again, I'd be trapping this from between the 131 and the 127, and trading in that range until one of those levels breaks on a significant time frame like the daily. All right, dollar index has been, this has been the star of the show for a long time, as you know. Big move up. It was starting to trend down a little bit, and then this session completely reversed it. Again, selling off a little bit towards the end of the US session, but realistically, the green is all there. The buyers are there, which means the US dollar strength is there. Of course, that spells weakness for the euro, but realistically, that's a very bullish sign, that candle. I know it's been, we have to be careful that some of these technicals are being impacted by very significant news. Like, we've got to be very mindful of that. So we've got to take them with a grain of salt a little bit this week. And we don't expect, I wasn't actually expecting such big moves last night, really, because like I said, normally non-farm payrolls is a pretty quiet week, especially the day before. But hey, we have to trade what we see. So I would be expecting a pretty quiet market now, though. So I'd be thinking this is probably going to quieten down a little bit. It's it hit its high again. Its recent high right to the basically to the pip, which is about 103.79, and sold off a little bit. But boy oh boy, if this is up here and closing higher again at the end of the week, like after tomorrow's session or after non-farm payroll, the euro is going to be very sorry. Next week we'll go straight into the euro. This is what, if this starts to push down and gets past the low here of that 104.80, you got to go a long way to find the next level of support, that's for sure. And look, we're sort of, it's at an area where it's already at support. We know this is a pretty important zone for it. You only have to look at the history through here to actually see that on a weekly chart, but it's going to find, basically pretty strong support all the way down to 103. So the next little bit's going to be a fight. Yeah, once it does break past this, if it does break down lower, it's going to be a bit of a fight, because these are, effectively candles that were reversing on a daily basis. You can see the fights that were happening through this area here. Big wicks on the weekly candles. It's probably going to be something similar. This has been a very, very big fall. Like, we can obviously, we've all got eyes, we can see that very, very clearly, but it is approaching that level where it's going to find it very difficult to keep going down without a lot of support in front of it. Okay, so this next 150 pips is going to be a bit of a battle, but it can most certainly get there, especially if the dollar index breaks up higher past the 103.80. So it's one of those ones where you got to watch and see. I'm not looking at going along on this in any way, shape or form until we get a daily series of higher highs and higher lows. Okay, so it's effectively got to make the lightning bolt on the way up, and it must close above the 20 moving average. Then we'll start taking scalping opportunities to the long. But until it does that, I'm not interested in the long in any way, shape or form. It needs to basically make a series of higher highs and higher lows, close above this level. Then we're starting to look for longs. And of course, if it breaks on and closes lower on the daily or the weekly, more importantly, past the 104.60 area, then next week we start to short down to the 103. That's what we're looking for. They're the breaks that we need to happen to actually get into the euro properly. All right, let's go to the all-important S&P 500. As you can see, yesterday's move pushed all the way up to the 20 moving average. Basically, as much as it looks messy, again, I keep saying this is technically perfect way it's trading, because it did come down, it bounced off the support. We knew we were going to find support here. It was already there. We saw the big reversal candle there, which is not quite a hammer, but close to. The price action certainly indicates a similar movement to a hammer, which is the only important thing that really matters. And then, of course, once the news came out about the interest rate going up to 0.5, but more importantly, the Fed talking down potential 0.75 increases, we saw a very, very big move up, and that all happened in the last hour or two of yesterday's trading. But all it did really was push the key indice back up to the 20 moving average, back to a level that we know is resistance. The one at the 4,300 level is a very, very strong resistance there. Coupled with the fact that the 20 moving average is there, it was going to have a great deal of difficulty getting past that. In fact, I probably didn't want it to go past there, truthfully, because really from a technical standpoint, it made more sense to actually reverse from this level. Failing that, look, it's got some work to do to get back up there again. We might have a great non-farm payroll number, and then tomorrow morning, this is a nice big green candle and completely reversing what happened there. But really, that doesn't really fill me with a great deal of confidence it's going to go long next week. We know we're at a seasonally weak time, which is approaching the end of the first week of May. So traditionally we're going to see weakness at this time of year. So the fact that this has happened, the volatility generally starts to shake up before we do see a bit of a sell-off. But again, we're only going to trade what we see. It found support where it needed to find support. If it's going to survive this next onslaught of selling pressure, it needs to basically rebound from here and push up past the 20 moving average. If it does that and gets past the 20 moving average on the daily, then next week we start to look for long opportunities back up to the 4,500. But failing that, if it doesn't do, this is the level that we're going for, the 4,500, the next roll reversal. But if we get a close, if the numbers are horrendous, or if it just wants to sell off for the hell of it, and the numbers are bad, and we close below the 40, say 60 area on a weekly candle or a daily candle, this can be the same thing. If we get that, then next week we're looking for shorts, and we're looking for shorts to the 39.50 is the first stop. We know that's the area that we're going to be targeting straight up. Okay, if we get to there and we don't get consolidation, the next one is a fair bit lower than that. But look, that's more than likely not going to happen in a whole week, I wouldn't think, unless we see a big sell-off. And we don't want that either. We don't want a panicked market. We want a market we can trade, of course. So this is a very, very important level. No surprise that it's at support prior to the non-farm payroll trading day, which will be tonight. Let's keep an eye on this one. If you're going to scalp, keep them short until the news. Be very, very mindful that the news is really moving these markets at the moment, and this week is one of the biggest ones for the quarter. So just if you're going to scalp, keep your scalping to basically the level that we know it can get to without much trouble, which is 4,100. It was there, only an hour ago. And of course, if you are trading up, be very, very careful that the 20 moving average is holding this up. And if it does get there, that's probably not a bad place to be taking your profits, because you've got strong resistance there. Let's get non-farm payrolls out of the way and see if we can start some good trends next week, because it's certainly setting up for that on a lot of the major indices and the currencies. So I hope you had a great week's trading. I think we had some really, really good opportunities. Hopefully you were able to take advantage of those. Have a great weekend. I'll see you all next week.